Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. An unusual key reversal down yesterday, one that I'm not really keen on, but one that still exists. This after the previous session's indecisive doji cross. The market punched up through the whole of the significant and previously highlighted overhead resistance, somewhat stratified and layered, stretching from 68.69 up to 72.29, but failed to stabilize over it before coming back down to finish between congestion at 71.29 and 71.75. Interestingly, the base of yesterday's action was on the bright green middle time, currently 71.07, of the December-based bright green bullish Andrews pitchfork. Overhead, we now have a layered congestion at 71.75, 71.99, and finally the December 23 low at 72.29, before we reach up to another, if smaller, congestion band between 73.18 to 73.73. Finally, we still have target X overhead at 73.25. This is the target for the doubling up of the break above the May and July 25 to January 26 bear channel. 2 weeks ago, this looked quite far, but now, well, not so much. So far today, well, a test up into the overhead congestion, but not making up as far as yesterday's high right now, as well as a test down to the May 23 low before coming back around to where we finished off at the close of yesterday. We're just underneath it at the moment. Spot gold. A bullish opening white Mariposa and fourth bullish white soldier yesterday after the previous session's bullish closing white Mariposa. We have seen some large ranges in recent times, and all had until yesterday centered around the very recent late January to very early February 50% Fibonacci line at 49.99. Last Friday, the market punched up and away from this, with a continuation higher yesterday. Whilst not perfect, for example, it does not have the correct number of touches, there is still a possible bright red February-based ascending triangle pattern, which is currently 49.48 to 51.14, which yesterday saw prices punch up through the top. This pattern has not a primary target X in the 54. This pattern has a primary target X up in the 54.40 area, around where the 100% projected Fibonacci sits at 54.48, with a harder to reach secondary target X1 up in the 55.80 area, just under the all-time high. As I said earlier, this is not a perfect pattern, so please bear that in mind, though the overhead area is fairly denuded of resistances for quite some while. In the bigger picture, we have the dark blue late December 25 to early February 26 bullish Andrews pitchfork, which I drew 2 weeks ago, and which I still consider might be able to show the potential bullish angle of attack of this market. Even now, it is still early on, and I may finesse this still to a shallower bullish shift pitchfork for the same move, but right now we are between the dark blue lower time below, which is currently at 49.34, and a dark blue middle time above, currently at 55.67. So far today, what is seemingly turning out to be a reaction move back down towards the breached bright red upper trend line of the ascending triangle, halting right now at 51.38, which is the 38.2% Fibonacci line, the big drop between late January and early February. Bitcoin. A bearish opening long black Mariposa yesterday and second bearish black crow after the previous session's second consecutive indecisive pattern This time it was an indecisive spinning top pattern. The market has recently been taking stock on what has been achieved and what is still lying open, and in the process has seemingly created a small dark blue sideways triangle, currently 66,016 to 69,332 over February, and it's possibly an extended pennant pattern. The core of this pattern has been the rotation around the bright red neckline extension, which is currently at 67,508. So the August 21 to January 22 head and shoulders top pattern. So a break lower gave a primary target X, not even a primary target, just gave a target down in the 63,357 zone, with a secondary target to reach target X down in the 58,017 zone. As you can see, the primary target was easily reached, though the secondary target is now just under the early February low at 59,946. Now, going back to that bright red neckline extension, I had said last week, and I quote, "This bright red neckline extension is a key element in any moves lower, as it is a sentry ahead of the important 50% absolute Fibonacci line at 63,129. End of quote. This statement I gave is still valid today, as this 50% absolute Fibonacci line has been a strong support this month, though it has been breached. It has not been broken as yet, and as I warned last week, and I quote, "So please look for any confirmations below rather than just the one close. It's a common mantra in all such things," end of quote. In the bigger picture, we still have a very large October 25 to date bearish halfway hesitation in progress, with the primary and secondary targets for this pattern already achieved, leaving just a much harder to reach tertiary target X2 down in the 54,000 zone. Plus, there is another pattern, a bearish pattern I would like to address, and one I had previously considered, is a February-based bearish cat's ears pattern. Now, this is a small double top pattern that forms after a big drop, such as the one we had in early February. The key trigger for this pattern was the low 2 weeks ago at 65,080. Yesterday we closed below this level, so it is appropriate that I indicate possible targets below for this pattern, of a primary target X1 down in the 59,223 zone, and a secondary harder to reach target X3 down in the 57,986 zone. Finally, as I have said last week, we have the potential showrunner for this recent move lower, and that's the bright green early October 25 to mid-January 26 bearish Andrews pitchfork, with the market today in between the overhead bright green upper time, currently at 77,297, and the bright green middle time below, currently at 54,868. Now, I am of course prepared to finesse this bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move, should this be required. Now, so far today, a further move lower, significantly down to test the 50% absolute Fibonacci, but as yet we have not stabilized below it.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.